Good morning, everybody.
Good morning, Mr. Commissioner.
Mahapi. Has somebody dealt with the temperature inside of this room? Has somebody looked at the aircon and set it properly?
It's too hot. It's too hot in here.
Okay. I assume that somebody is attending to that. Yes, okay. Yes, Mr. Mahapi. Shall I, all right, remind Mr. Mlibatsi that you are still under oath?
Yes, sir.
Yes,
Thank
thank you.
you, Mr. Commissioner. Mr. Mlibatsi, we left off at the point where you were about to go into the Sagarmatha Technologies transaction, commencing on paragraph 50 of your statement. Can we proceed from there?
Good morning.
Good morning.
Mr. Mulibatsi. Before you go ahead, I've got a couple of questions I wanted to check with you. Yeah?
Yes.
All right. Maybe if you could go back and explain again the 3 reports that you normally do and what is the differences of those reports as a first question.
Okay. The first report that we refer to is the deep dive report. Mm-hmm. The deep dive report are the vast majority of reports that we generate as a team. These reports really are about looking in quite a lot of detail into the investment opportunity of a company that is already listed on the JSE. Mm-hmm. And effectively, the analyst's job would be to unpack the investment case, to understand the drivers of the industry in which that company is located in, and effectively using the 4-factor framework to capture all the critical components of what we would use to make a decision, an investment decision of a company. So that's what a deep dive report is. Its use is purely for the internal equities team. So in other words, the team that is in charge of managing the enhanced index portfolio. So that is where that deep dive report essentially is used or presented. All those reports are then stored in a central database, which is a platform called CodeRaid. And the call of the analyst is recorded on that system, and that call is tracked over time. So that is really the role of a deep dive report. It doesn't get presented to PMC, it doesn't get presented to IC. However, obviously that information may be discussed with other teams or with executives if they have questions on any particular company. The other 2 reports are really linked to the approval process for investment opportunities that go through the PMC approval process. So both reports, the scoping report as well as the appraisal reports, both those reports are submitted to PMC1 or to IC, depending on the size of the transaction and the delegation of authority. So the contents of those reports are similar to a deep dive report. They may not be as detailed as what a deep dive report would be. For example, if it's an IPO and there's limited information, for example, it may not be as detailed as what a deep dive report may be. The scoping report essentially is almost identical to the deep dive report in the listed space, because when we take an opportunity to PMC1 to ask PMC to apply its mind whether we should go into due diligence, the way we approached it was we would want to go to committee with a level of conviction of what we think about this company before we take it to committee. And so a lot of work generally gets done and is captured within the scoping report before it goes to PMC1. And so what you then find is that there may be inputs from PMC1 or there may be additional questions that we may want answered that would then find itself into the second report, which is the appraisal report. However, those reports generally are very similar.
So just PMC1 is where consent is given to go into DD.
That is correct.
The first report, which is the scoping report, is for the PMC 1.
That is correct.
Generally, and then the next report is for the PMC 2.
That is correct.
All right, which is sort of the final report, really, for the final report, the appraisal report.
That is correct.
Okay, all right. Next question. The PIC manages about what? I think it's R1 trillion or so in the equities mandate, it looks like. You must correct me. And you said that you got a tracker portfolio, and then you got a sort of an enhanced indexing portfolio.
Correct.
I just want to get a sense of sort of what kind of returns are generated from those two portfolios. Are these segregated portfolios? And how do they compare with the outsourced portfolios? Am I being clear?
Yes,
Okay.
you are clear.
Yeah.
I will speak in estimates here because the numbers do change as
Just
the market
roughly,
moves.
and then we can get the correct figures.
Okay.
Yeah.
So the equity funds that are managed by the PIC, both externally and internally, are about 1 to 1.1 trillion rand.
Yeah.
80% of that 1 trillion rand, so let's call it 800 billion rand,
Yeah.
is managed internally.
Yeah.
Okay. So of that 800 billion rand, about 240 billion rand is on the enhanced indexed part,
Yeah.
and the balance will be on the pure indexed part.
Yeah.
The pure index,
660 billion, roughly around.
roughly speaking, correct. That the tracking portfolio will almost replicate exactly what the market would have done. So, for example, last year the market gave a negative return. So that fund will also give a negative return because it replicates the performance of the index, which in this case being the JSE Swix index. The enhanced portfolio also last year would have also generated a negative return because it also is very similar to the index. So in other words, if you can imagine the index has got about, let's call it 160 stocks, both the tracker fund and the enhanced fund will both carry also about 160 stocks. The difference between the tracker fund and the enhanced index fund is that we then make a bit more, let's call it bets, or we hold slightly different weights in the enhanced index fund relative to the benchmark. So we can, for example, if I use an example, let's use Naspers, which would be the biggest company, I suppose. So let's say in the index, Naspers is 25%. In the tracker fund, the tracker fund will hold 25%. In the enhanced index, if we think in Naspers is expensive, we may hold 24% as opposed to 25%. So we would be underweight Naspers. And therefore, if Naspers therefore underperforms relative to the benchmark, we would then do better because we would have been underweight. So those are the critical differences. So if you look at the performance, because the market has given quite low returns over the last 3 years, it's almost single-digit returns. The fund would also have given single-digit returns.
And the other funds which are managed by the external managers, do you have any points there? Because I wanted to compare sort of internal fund management.
Yeah, I can't speak with too much authority on the external management. What I can say, just based on the data that I see, is that the internal fund has performed better than the external managers. But I think, the extent we can get back to you in terms of the relative amounts. But just based on the reports that I get to see, the internal fund relative to its benchmark has performed better than the external managers.
When one looks at the figures from the PIC, I mean, generally you say you have generated something like, 9%, 10% growth in the assets. But the stock market has been down for the past 3 to 5 years, I think, where does that performance come from? Because we know that the market has been down for 3 years at least. And, but when one looks at the figures from the PIC, it says that, you know, you have generated some 10% returns for 3 years, 5 years or whatever. So where would that come from? Is that fixed income or somewhere else? You know?
That is correct. I think the portfolio of the PIC, which is exactly the science of portfolio management, is to ensure diversification. It's a very important risk management tool, is to ensure that the entire portfolio is diversified in such a way that you almost have negative correlations. In other words, when one asset class is performing poorly, another asset class should be able to pick up the slack. So in this instance, for example, you know, on a longer term view, listed property as an example would have, you know, even though listed property had a very difficult period in the last while, but over the longer period, you know, listed property from a total return point of view would have performed a bit better than listed equities. So PIC has got quite a significant portfolio both in listed property and in unlisted property. So those returns would contribute to growth. I think you are correct as well in terms of within the fixed income space. Obviously, there's two components in fixed income. You would have the money market space or the cash component. That money market return would have, you know, generated circa 6% or so, and therefore that would have contributed, and that's a significant part of the portfolio, the fixed income portion as well, meaning the bond portfolio as well as the money market portfolio, that would have generated decent returns. I think the offshore portfolio as well. Because remember now, in the offshore, when the currency is weak relative to the dollar, as an example, that is quite a strong source of relative growth and not even absolute growth in or actual returns. So the money that is invested outside of South Africa that is dollar denominated would have generated a return. So I think, and obviously private equity, I can't really speak to those returns, but that's also another asset class. So I think the combination of all those asset classes would have then resulted in the entire portfolio generating that said return. Having said that, I mean, I think in the longer term, if you look at equities, I mean, equities have generated quite strong returns. Before we look at the last 3 years, you know, equities had very, very strong returns. And so if you look at the fund profile over a longer period of time, equity returns would have contributed quite materially to the growth of the fund.
So time is coming for you guys to make some returns in the next few years, because it's been a difficult time for the equity market.
Apologies, Commissioner. May I ask you to repeat that?
I'm just saying, it looks like time is coming for you guys to make some good returns, because it's been a difficult time for the equity market.
I think you are correct, but I think it is a very nuanced discussion. In other words, if you look at the market, there's very, very diverse and divergent expected returns even within listed equities. So if you look at, for example, industrials, and you look at resources, and you look at financial services, our expected returns within those subsectors are actually quite different. So we, for example, have been positive resources stocks relative to financial stocks for the last 2 years. So because it's, and I mean, I can go into the detail if you want, but because of our view on global growth and what we think that will mean for commodity prices, we actually became very bullish resource stocks in the last 2 years. So if you look at what resource stocks have returned relative to, let's say, financial stocks, you'll see the difference in return is quite big. So looking forward, therefore, you would expect some probably less of returns coming out of resources, because I think they run quite hard. But I think financial services are showing value. So I think I'm saying overall I do agree with you, but I think that our job is to ensure that we understand the detail of those relative returns even within equities, because those returns can be very, very different.
The final one is, how do you translate the GEPF mandate to portfolios? You know, so do you have like one fund for the GEPF and one fund for the UIF? How does the segregated nature of the portfolios work?
Yes, that is correct.
Clear?
So,
is that clear? Okay.
So each one of our clients would have a segregated portfolio. So the GPF would have a separate portfolio to the UIF, as well as to the compensation commissioners and compensation fund, as well as our other clients. And each one each one of our clients will have a different mandate. You know, for example, within the, you know, the GPF may issue a certain parameters around our tracking error. In other words, the extent to which the overall fund may deviate from the index. They may have their own view of what they want that, and that is captured in the mandate, and the UIF will have a separate view. The UIF mandate is largely passive, and so, you know, each one of those mandates would have their own nuances, which would then use that to execute our investment strategy.
And broadly then, is that the general mandate, the sort of the asset allocation would come from somewhere, because then they might say they want a certain percentage of bonds, a certain percentage of property and all that. Is that how it works?
That is correct. So within the mandate, what we call, there's sort of strategic asset allocation. In other words, there are ranges that the client will give you to say, in our mandate, we allow you to hold between, let's say, I'm just using examples, not exact numbers, let's say between 40 to 50% in equities, bonds 20 to 30%, etc. And therefore the client will give you those ranges that you are, you know, mandated to keep within, and therefore you may tilt the fund. So in other words, you may want to say we are more positive equities relative to bonds, so we would want to be on the upper range of equities and on the lower range of bonds. And then if you're positive bonds relative to equities, you may then want to say we want to sell a bit more equities and buy more bonds because we see more returns in bonds relative to equities, but obviously confined within those ranges as mandated by the client.
Just to do a final check on the 4-factor model, you know, just coming back there, is that, are you happy that it covers all the key things that a company, you know, does? And what is the valuation a large part of that scoring also, you know? And I know you said you got the ranking table and then after scoring and all that, but I just wanted to check what you designed. Are you happy that it covers all the key issues and all that in a company?
Through you, Commissioner, yes, I'm happy. And I think that framework has worked extremely well. And it's actually resulted in very good performance in the fund. I think in my humble opinion, it's a very good framework. In that framework, we don't value one component higher than another one. So valuation is one component. However, the other ones are important as well. So it's not one that would override the other one. There are extremities where, for example, if uncertainty gets to a point where, you know, if you use an example where, for example, there's litigation, Steinhoff is a good example, where there's fraud and there's extensive amount of liquidation, etc. The uncertainty of that stock is so high that it doesn't matter what we think about the other components. So there are extremities. However, on balance, when we look at a firm, each one of those components, roughly speaking, would be 25% of each component of how we apply our mind where we think about the overall investment opportunity in that business.
You mentioned that we need to put money in a global portfolio, and when the rent weakens, you know, we make a lot of money at the PIC and all that. There are people who are against that, you know, saying that we need to deploy money locally and all that. What's your views on that, you know, on that?
No, thank you. It's a good question, and through you, Commissioner. So I in my humble view, they're not mutually exclusive. I think from a client point of view, it makes a lot of sense to diversify one's portfolio globally, because, you know, purely from portfolio analytics or from portfolio management theory, is that the more you diversify your portfolio, the better your risk-adjusted returns up to a point. And so it would make sense to, given the size of in particular the GPF's funds, to diversify its portfolio in such a way that it may reduce to some extent the concentration risk within the South African equity market. Having said that, it doesn't nullify the argument that there are attractive investment opportunities within the South African market, and a lot of those investment opportunities would not necessarily be listed. And also there is an argument to say that given that the PIC's assets under management closely correlate the GDP growth of South Africa, it would make sense that part of the funds needs to be allocated to stimulate the economic growth of South Africa. Because as South Africa grows, in the long term, there is evidence that as the South African economy grows, the assets under management of the GPF as well as of the PIC grow in similar correlation. So therefore, there's an argument to say to stimulate economic growth within the SA context is also good for the client in the long term.
Then the conundrum about listed versus unlisted and all that, how, this is a big question that, people are saying the PIC is putting too much money in the listed market, of which you are the custodian. What's your view on this, this dichotomy of, JSE versus sort of real assets?
It's a good question. And through you, Commissioner, so this is my view, is that the construct of the current SWIX is too concentrated. In other words, you are carrying, if you look at the top 10 stocks within the SWIX, it is quite concentrated within those companies. And therefore, for us to have so much exposure on the listed space creates concentration risk. And I'm not sure whether that is good for the portfolio in the long term, given that, I believe that diversification to a point is good for risk-adjusted returns. So if you look at it within that context, then to say, it would be good to diversify away from that. And on the other side of the allocation, it would be through global allocation, it would be through unlisted assets, it will be through other assets such as infrastructure funds. So there's quite a lot of asset classes that I think could be explored to diversify the overall portfolio away from the SWIX, because I do think that the SWIX is concentrated.
And besides, is that, the JSE is like the Chinese company called Tencent, really. 23%, 22% of the JSE is mainly the Chinese economy.
I agree. It is a bit more nuanced than that. I hear what you are saying. Mm-hmm. However, if you look, and I agree that Tencent is almost more than 100% of the value of Naspers. In other words, there's a ramp within Naspers that you're almost getting for free because Tencent is such a major valuation. Having said that, I think Tencent in itself is diversifying away from the Chinese consumer. So, I don't want to get into, we can debate that. I don't think it's as, straightforward as saying it is all about China. I think it's much more nuanced. Having said that, I do agree that the concentration risk, whatever my view is, my fundamental view may be around Naspers and Tencent, is that it is simply too large as a contributor to the benchmark. And therefore, either way, whether we like the stock or not, purely from a portfolio risk management point of view, the concentration is simply too high.
So if we had to make some recommendations, what would you say one could say about listed stuff on the JSE companies? As you know, you got BAT, which cigarettes, which is a large, you got the beer, the SA brewery stroke, SAB mill and all that. What is it called, by the way? It's called
AB InBev.
AB, yeah. So what is there something that you can say about the structure of the investments?
I think there's probably two main components there, and I'll try and keep it short. The first one is that because of the construct of the SA economy, which is really quite a concentrated economy within, I don't want to say it's monopolies, but you've got big conglomerates that are dominant within the SA economy. That will reflect within the market by definition. I think the other one is that you've seen quite a dearth in initial public offerings or companies coming to market because of the poor economic growth. And so I think it's almost like the index or the JSE is an outcome. In other words, it's an indication of the structure of the underlying fundamental economy in the South African economy. The reality is that quite a lot of SA corporates have diversified outside of South Africa, and there are a lot of companies that find themselves within South Africa that have not been able to grow because the South African economy simply has not been growing. And as a result, you then begin to find this concentration becoming more and more of a challenge. So the way you solve for it is you solve the economic problem. And that will result, in my view, in the long term, in an index that is reflective of a growing economy, and therefore that will have much more companies that are on the JSE and therefore less concentration.
Thank you.
Thank you, Mr. Commissioner. Mr. Mlibatsi, let's go to Sagarmatha.
Okay. Thank you, Commissioner. I will walk through Sagarmatha Technologies transaction, or that was supposed to happen. On the 21st of December 2017, Fidelis sent an email stating that he had spoken to Sagarmatha management and has agreed with them an IPO date of the last week in January 2018, or latest, the first week of February 2018. Similar to the IO transaction, Victor was allocated to be the primary analyst. This meant that Victor will be the main communicator or contact for Sagarmatha and conduct the research for the purpose of preparing submissions to PMC. These reports would allow the review process, would follow the review process as per other transactions. On the 22nd of December 2017, Victor sent an email to Fidelis asking for the Sagarmatha management's contact details. Fidelis subsequently sent Mr. Takuzwa Hove's contacts, who was Sagarmatha's CFO. On the 8th of January 2018, Victor sent a request to Mr. Hove by email requesting a prospectus and a pre-listing statement. Mr. Hove responded that, quote, "Our suggestion is that we first come to present to you the bigger picture of the vision, as the PLS, which is currently work in progress, doesn't properly articulate our position," close quote. I was not CC'd on this mail. On the 9th of January 2018, Victor requested that Mr. Hove and his team come to present to the PIC within the week. He highlighted, that is Mr. Victor, that there are tight deadlines and that Victor will require the necessary documents within the week. On the 11th of January 2018, I attended a meeting with Sagarmatha management at the PIC offices. The first things that struck me was that firstly, that a Sekunjalo related group company was looking to do an IPO so soon after IO. And secondly, that the capital raised was to facilitate, amongst other things, the purchase of independent media. Although I was not aware of the detail around the funding of independent media, and just to add is because it was done under the unlisted side, I knew that PIC had extended a loan to that company. Sagarmatha Group Holding Companies, Pty Limited, is related as follows to IO Technology Solutions. Sekunjalo Investment Holdings, Pty Limited, owns 61.37% of AEEI Limited, which in turn owns 49% of IO. Sekunjalo Investment Holdings, Pty Limited, owns 73.3% of Sagarmatha Group Holdings, Pty Limited. Dr. Iqbal Survey controls Sekunjalo Investment Holdings, Pty Limited as follows. Sagarmatha Group Holdings, Pty Limited, is a wholly owned subsidiary of African Technology and Media Investments, Pty Limited, which is wholly owned by Sekunjalo Investment Holdings Pty Limited, which in turn is held by the Haras Trust. The trustees of the Haras Trust is Dr. Iqbal Survey, and the beneficiaries are Ryan Survey and Sarah Survey.
Sorry, can I ask you a few questions, if you don't mind?
Correct.
If I could come back to the point on 53, how can a company asking for funding saying that their pre-listing statement does not reflect what they stand for? I mean, does that not send warning signals in itself that what you're putting out is a pre-listing statement, even if you call it a currently work in progress, but they can't present that to you?
It was a big red flag and a big concern.
And what did you do about that concern?
We communicated with them, obviously, and I mean, if I just look at Victor's correspondence, it was clear to say, we need documentation that we can work off. So it was a concern, and we raised it with them. I raised it in a discussion with Fidelis during debates to say, it doesn't seem like this company is ready to do an IPO. Their documentation doesn't seem to be at a stage where it is ready. However, we were acting under the understanding that we have to put it together and find a way to take it to PMC.
And if I looked at your paragraph 55, a concern that Sekunjalo-related company was doing an IPO so soon after IO. And if we go back to the conditions precedent that were not conditions precedent of your 20th of December meeting, but you can't have condition precedent after the money's been paid. But your condition precedent 4.2 says, a commitment that IO will spend the equity funds raised only on acquisitions for growth and within 24 months. That reflects to me, and I would want your view on that, whether in fact that you were concerned that the funds could be used for other things. And that relates to your question of 55, that you were aware that there had been funding of independent media separately. When we look at your paragraphs that you read, 56 and 57, in terms of risk, previous witnesses have stated that each entity or each deal is only viewed as its own deal. Is that correct? Because surely with the kind of issues that you've raised in these paragraphs, from your perspective as risk, would there not have been a cumulative risk assessment? As what is your exposure to the whole group?
That is correct, that through you, Commissioner. So I think you've raised very, very good points that I fully agree with. I think the first thing is that IO was already a difficult investment to make. And so to then have a subsequent Sekunjalo-related company, almost, if you look at the timelines, it overlaps. Was almost to say, you know, this is very strange. So that is just looking at it before you even delve into the detail. That's what was my initial thought. The second point was to say that independent media I mean, you cannot compare the nature of that firm to a BT, for example. So the risk profile of a media company that is already loss-making is a completely different proposition to a global IT firm. And so you already even then have question marks, even if we had not had exposure into independent media. And that when you add the fact that we had, on the unlisted side, funded independent media, it obviously, the accumulation, and then so that's one other one. And then, as I think you rightly point out, is that ultimately there is exposure to an individual, even though it's not direct, but effectively there is exposure to an individual. Once again, it adds to the risk concerns.
In that circumstance, as the head of risk, why did you proceed?
Apologies, Commissioner. So I'm not the head of risk.
No, but in terms of this assessment, you were there, and you had to then, obviously it goes to the different hierarchies, but let me put it differently. What was your stance in this deal, and how did that get taken forward about whether it should go to PMC and with what recommendation?
Yeah. So I think the way we managed this was to say, if indeed we are being asked that we have to take this to PMC, there were several things that we needed to do, and it's similar to what we did with other companies that we were asked to go and submit. One, understand the business model in detail. Understand what are we dealing with, what are these people, what is this company purporting to be offering as an investment case. Understand that in detail and see whether fundamentally we like that. So already there we were saying fundamentally we're not attracted to a media company that is loss-making. So that's the second thing is to understand the risks and ensure that we highlight those risks to the committee so that they are able to apply their mind to understand the risks that are contained in this transaction. Third was to capture, in our view, what we thought was the fundamental value of that firm. And remember, in this instance, you had a loss-making company that was almost at the center of this. So the value proposition thereof and how we valued it resulted us in coming out with a much lower valuation. So the way we responded was to say, if we had a choice as a team, we would say, we don't even think this should even go to committee. But the fact that we don't have a choice, how do we then respond? How do we manage it? We say, well, let's the points that I've alluded to. And so when we took it to committee, we highlighted the risks. We explained what the business model was. We then put a valuation, which obviously was much lower than what the IPO asking price would be, and a big part.
Just give the numbers there, what your valuation was and what they were on.
Yes, I do touch on it later, but I'll tell you our valuation number was 7 Rand 6 cents, and their asking price was 39 Rand 62 cents. So we then captured that in our valuation as well. And as I say, a big part of it was to capture the fact that from a business model point of view, independent media was not a great business model in our view. In addition to that, obviously, the other online businesses that were being purported to be growth businesses, we took a much more conservative view on them than I think was purported by management.
If I understand you correctly, you did take it to the committee in the group sense of saying this is the interconnectedness and this is Sagarmatha, or did you only deal with Sagarmatha?
I must just recall exactly what we said in the group, but we would have touched on the shareholding structure, which would have obviously revealed, if I can put it that way, its relationship to both independent media, because obviously we talked to independent media in the report, which would have been known that independent media is a related company to Sekunjalo.
But in your submission, would you have said our exposure to this group is your 4.3, and if Sagarmatha goes ahead, you add that amount, and the independent media is that amount? This is your exposure of PIC to that group?
Okay,
is it within the limits?
I don't recall. No, we didn't. I don't recall putting that particular detail in terms of the cumulative exposure, if that's what you're...
I am.
Yeah, that's
because surely when you're looking at risk, that's what you've got to look at, not the individual exposure, but the cumulative exposure to a particular group.
You are correct, and I think we do touch on that to say this is a related party to this additional group. So what I'm trying to say is we may not have added a numerical exposure. However, we definitely highlight very strongly that this is not a standalone company that is completely unrelated to ultimately the Sagunjalo group.
If I go back to that condition precedent that wasn't, the 4.2, about stipulating what IO could spend it on, and you looked at your presentation in paras 56 and 57 that you read out, could it be considered that this is a corporate Ponzi scheme?
I wouldn't say a Ponzi scheme. What I would say is in any group of companies, you will have related parties, and it happens in group companies in other instances.
Sure, but the question of different groups should be, I mean, and that's why I'm going back to the resolution about that was taken. Because, yeah, obviously there's companies with lots of different groupings within it. But I'm asking whether, in fact, the funding of one element would have been used to fund another so that you've got a circuitous flow of funds that's the same fund, in essence, to ensure that they all sort of meet their obligations, but it is because of the way you're spending the same money. And that's my concern in this holding and the resolution that asks the question. It can't be used for other things, assuming if you put that in a resolution, my assumption would be you have an awareness that money it is raised for A is actually used to pay B.
Can I add to that question? You know, companies on the JSE do raise money to pay off loans and everything. You know, they do that generally. Could it be that the IPO, the money raised there, was also partly meant to repay the loan from the, from the independent media?
Okay, so a couple of points just to unpack. Yeah. I think, firstly, there were serious concerns that a company ultimately related to IO wants to raise fresh capital so soon after they've raised IO. That is definitely was a major concern. The second one that was a concern, which I think you are touching on through your commissioner, is that even within that related party construct, there's a company called Independent Media that had been funded by the PIC on the unlisted side, of which in the draft PLS, it was made explicitly clear to say some of the money raised from the capital raised will be used effectively to buy out PIC's own investment. So if that's what you mean when you say Ponzi scheme, that is not normal. That is not that would not have been good for clients, in my view, or for the portfolio, in my view. So that was a concern, and I think the committee, and you'll see when we talk to it, is that I think that the committee to approve DD actually declined the request for DD, and one of the things that it raised was exactly that issue, to say, if capital will be successfully raised by this group, it cannot be that part of those funds are used to extinguish a liability they owe the PIC on the other side. Because you had these Chinese walls between listed and unlisted, and one needed to ensure that you don't run a risk where the listed team does one thing that will be used to fund a transaction from the unlisted side.
Do you know if at the time the independent media loan was being serviced?
I do not. As you know, there are Chinese walls between listed and unlisted, so sure. I do not. Yeah,
but I would have thought that one of the questions would be for the committee to be aware that if there was a loan on the unlisted side, it was being serviced. And can we check on that and get that information?
Sure.
Yeah. And then just one final question in relation to this: IO decision making and timelines was a result of pressure, and you have exactly the same with Sagarmatha. How common is that in other entities that you deal with, that you are put under pressure to fast track, if one's kind about it, fast track the process to enable a listing to be done in that way, and two companies within the same group, within the same time span? How common is that in the work that you do?
Yeah, it's a good question. Thank you, through you, Mr. Commissioner. The first comment I need to make is that there are IPOs that happen within a very short duration of time. It happens in the market. There are where management will issue a pre-listing statement, and within a short period of time, and I can't give exact times, but to say, 2 weeks, three weeks from now, here we've got our pre-listing statement. Please, may you consider this opportunity, and we will be IPOing. The difference between that kind of timeline, that is a normal IPO timeline, in this one was, one, that it was a private placement and PIC was going to be taking a significant portion of that private placement. And therefore, one would have expected that we could tell the management who are coming to ask for that to say, we do have governance processes that we have to follow, and they may not happen within that 3 weeks, 4 weeks period of time. And therefore, you, because we are effectively becoming an anchor in this issue, you need to give us more time. And that was the anomaly here with IO and with Sagarmatha, to say, in my view, we should have been able to say, and I think Victor did send an email, post my discussion with him as well, is to say, Malik, we cannot meet the 15th of December deadline, please can we move it? And I think if I recall, he responded, I think on the 14th, on the day we signed, to say, you know, we've had discussions with the executives and they are comfortable that this thing must go ahead. So there was definitely, we were being an undermining at our level in terms of those timelines. So I agree with you to say, yes, in a normal IPO, you could argue 2 to 3 weeks is fine. But in this case where it's a private placement and you're taking a significant portion, we should have been able to push back. And even with Sagarmatha, when you look at the first email that was sent by Fidelis to say, I have agreed already with Sagarmatha on the timeline to say January and latest, I think he said first week of I mean, you know, so one would have expected to say before you agree, you would either have a discussion with the team to say what is reasonable, what can be done, or some kind of level of discussion. In addition to, I think you raised the point to say you're having this overlap of capital raise of two related, of companies that are effectively, if I say sister companies. So those were issues that are anomalous in my view.
And in addition, if I could say, you go back to the question that your PLS was not available and you are then going on a verbal presentation to make that decision. And in addition, that the only taker of both entities is the PIC.
Yeah.
In the AO, PIC took the lot, and in Sagarmatha, PIC was going to take the lot.
Look, I think the undertaking initially on IO was not that PIC will take the lot. That changed subsequently, agreed. So what I'm saying is, I'm not saying you're incorrect. I'm saying the understanding that the team had at a particular point in time was that we are not taking 100% of the issuance. That came subsequently with discussions with Dr. Dan on the 13th, I think it was. But you are correct, it is to say, either way, even if we're not taking 100% of it, we're taking the vast majority of it. And therefore, in as much that there is not anything in principle that is incorrect by being an anchor and taking the majority of an issuance, however, given the overlaps, given the timelines, it was difficult on the team. It was extremely difficult on us.
Yeah, question? We sort of heard from Mr. Magula, I think, that many transactions don't actually make it to PMC 1. You know, those that come from the streets or from somewhere else. What were the sort of reasons for this one to make to PMC 1? Because it looks like many don't even reach PMC 1. You know.
I can only go on what the discussions that I've had, and I may give you deductions or assumptions of what I may assume, but it was obvious that the CEO wanted this transaction to be presented to PMC. And so I think if I recall, and I'm just now going on what I recall, there were comments made by Mr. Fidelis Madawa, for example, to say, guys, you know, I've had a discussion with the CEO, he wants us to go and present this to PMC. And so in the Sagarmatha particular situation, it was a instruction. As I said before, there have been other IPOs where we were instructed to meet management, but it wasn't explicit to say this transaction must present at PMC.
So tell me then, I mean, what makes a transaction not to go to PMC generally? I just want, yeah. And I spoke about, sort of, standards that people sort of have to uphold and not listen to the CEO, something we chatted about. I just want to understand what disqualifies a company from going to PMC to PMC generally.
I think when the team is not instructed to take it to PMC, my experience was we had much more a sense of, I don't know if I want to call it ownership. In other words, we could express a view to the management, to other people that may want to do an IPO, to say either we need more time or we think this doesn't work. And therefore, we had room to express a view to management as to whether we think this should present at PMC or not. But I think there was a change. I must also be clear. I think post-IO, a lot of things changed. I think, let's say IO and Sagarmatha, and after the audit finding, and just the experience and the takeaway from what happened with IO, which in a lot of ways was a game changer in the team, was to say internal audit came to this commission and said there must be action taken against the deal team, as if it was the deal team that wanted IO to go to PMC, that wanted Sagarmatha to go to D. We were working within constraints and operating under instruction. And so it doesn't make sense to me. So but it became clear to the deal team to say, there's a level of whether whatever the perception you may have had around the role the CEO has, and in the private sector it happens quite a lot where a CIO has a final say in a transaction, as an example. In this instance, we needed to strengthen, our ability to say, if we're going to take this to PMC, we either need to continue to highlight the risks quite strongly to committee, or if we think that this transaction, if I say there isn't pressure to take it, we apply our minds. So I don't know if I'm making sense. In other words, there's a big difference between transactions that we were told this is coming from the CEO, he's asking this needs to go to PMC, and those that maybe the executive head would have said, please meet with this management team and tell me whether you think this is something that could go to PMC.
Yes. The big issue is that, if the CEO says, this is a transaction, it must go through, and you guys point things there and there, this is not good, but it still goes through, that becomes a problem because the transaction might be good or bad. But the fact is that this is from the CEO, generally it looks like that would go through, and that messes up the investment process completely because the merits are not engaged properly and all that. Is that correct?
Commissioner, I think I would agree with that. I would agree that when you disempower the team, and yet there are stakeholders that want to hold us accountable, it creates a material disconnect. One is happy to come to the commission and explain my portfolio and why my portfolio is underperforming the benchmark, et cetera, but it's difficult for internal audit to come here and say we want action against the deal team when actually when you look at what happened there was instruction issued by the CEO and we managed within that context and did our best to manage and protect the PIC within that context. I don't know if I'm answering the question.
Yeah, thanks. Thank you.
Mr. Commissioner, can I perhaps just come in here? I refer you to the terms of reference of the PMC listed. 5.1.1 and 5.1.2, dealing with the responsibilities and duties of this committee. It says it must ensure and monitor compliance with all applicable laws, regulations, and adopted non-binding rules, codes, and standards in a way that supports the organization being ethical and a good corporate citizen. 5.1.2, ensure that responsible investment is practiced to promote the good governance and the creation of value by investee companies. It would appear to me that in IO and Sagarmatha, this was just ignored. Am I wrong? Am I correct?
In IO, I think the fact that we entered, or the transaction was entered into, and the irrevocable was signed before PMC, means that, and that PMC was asked to ratify, means that we entered into a contract that didn't present at PMC, which means that PMC didn't, pre-entering into the contract, apply its mind, and given the opportunity to apply its mind. And so that was that was not a normal way to do a transaction. And the ratification of that transaction was to say that transaction was entered into, it is now being presented to PMC, and now PMC is looking at that transaction and saying whether this transaction exposed PIC, and that is why it said, in my reading of it, we approve the transaction, we are concerned about the valuation, and therefore we recommend a put, amongst other things. So PMC did apply its mind on this transaction. It didn't happen according to the normal process and policies of the PIC. So in other words, it didn't happen, this was not a normal, there's no ways of trying to argue that this was a normal approval process. It was not. But what I'm trying to say is there was a point where PMC did look at the transaction and did apply its mind to it, and not only apply its mind to it, it gave an approval, which it should have been a ratification, given that it was entered into. On Sagarmatha, PMC did apply its mind. The irrevocable was not signed before that PMC, and therefore PMC, the Sagarmatha opportunity was ventilated at PMC, and PMC applied its mind and resolved to approve not at the 39 Rand, but at the 7 Rand. And so I do think that IO and Sagarmatha are not the same in the sense of the timing of it was completely different.
Sorry, but the deal actually didn't go through not because there was not approval. It went through, did not go through because of an FSB problem.
No, and I deal with it in my statement where
Okay, let's get to that then.
yeah, where I explain what happened there.
Thanks.
You can continue, I think.
Yeah, okay. Let's proceed from paragraph 38.
Paragraph 38.
Sorry, 58.
Okay. On the 12th of January 2018, Mr. Victor Siani received the draft pre-listing statement from Mr. Takudzwa Hove. Victor started preparing a PMC submission using the draft PLS. The use of the draft PLS was due to the time pressure placed on the team as per the undertaking Fidelis had concluded with Sagarmatha on the timelines. The exposure to a print media company that was loss-making made the Sagarmatha opportunity not as attractive to me. However, as per the request from Fidelis to make a submission to PMC, Victor proceeded to put the submission to PMC1. In our submission, we had already highlighted that our fair value was much lower at 7 Rand 6 cents compared to the Sagarmatha's IPO asking price of 39 Rand 62 cents. In addition, we outlined that part of the capital raised from the IPO will be used by Sagarmatha to buy PIC shares in and loan claims against independent media and Sekunjalo independent media. This information was disclosed in the draft PLS, where it referenced a sale agreement entered into on or about 1 December 2017. I remember this being a major concern to me. The PMC submission document was signed on the 24th of January 2018.
Question? During that time, and you sort of had the concerns, did you speak to your boss, Mr. Madav Fidelis, about your concerns? Did you call him in a corner and say, hey, you know, I got serious concerns about these issues and all that?
Many times, and I mean, it was in his office with Victor. At times, it was in my office. You know, there was definite constant debate and discussion, and we raised the concerns. And I think the extent to which we were different in the valuation is a big sign to tell you that we really did not have appetite. And we said, if we do have to go and present it to PMC, we are asking PMC to approve a participation at a price much lower than what is being asked for. PMC was held on the 25th of January 2018. PMC declined the request for DD for the following reasons. For the transaction team to interrogate the Sagarmatha valuation assumptions further, for the transaction team to establish from Sagarmatha who the potential investors are, the transaction team to confirm the validity of the agreement stated in the Sagarmatha pre-listing statement pertaining to the sale agreement entered into on or about 1 December 2017. PMC, however, resolved that the proposal could be resubmitted post further work stated in, apology, there's a typo there, 61.1 to 61.3. PMC further resolved that the company secretariat should check whether we can take the submission to IC to test their appetite. As we continued to engage with Sagarmatha management, it became clear that our view of the valuation was significantly lower than their IPO offer price, and they were not willing to lower their expectation. It is important to note that as with other transactions, including IO, we had numerous debates on valuation as a team. That is Victor, Sunil, myself in this case. My view on the valuation was based on analysis of documents provided and debates amongst the team. The other sources of differences between us, i.e. Victor, Sunil, myself, and Sagarmatha, was the idea that some cash raised from the IPO, initial public offering, would be used to buy independent media shares from the PIC. This would in effect mean that the exit of PIC would be funded by the PIC. The JSE approved pre-listing statement was issued on the 26th of March 2018. This is the version that Victor would then have used to prepare the PMC, I should say PMC2 submission. The final PLS did not make reference to the previously mentioned sale agreement, wherein Sagarmatha would buy PIC shares in and loan claims against independent media and Sekunjalo independent media. Based on the minutes from the PMC meeting held on the 6th of April 2018, the sale agreement was nullified. So in other words, it wasn't nullified at that meeting, but when I look at those minutes, it says at some point that sale agreement was nullified. I can't trace how it was nullified, who nullified it. All I can pick up was just from those minutes. I was not part of the discussion that resulted in this nullification. The sale agreement was signed by Dr. Dan, and I therefore assumed that he would have been the one who negotiated this. On the 4th of April 2018, we submitted a request for IC to approve participation in the Sagarmatha IPO, not at the asking price of 39 Rand 62, but at the PIC's estimated intrinsic value of 7 Rand 06. On the 6th of April 2018, a special PMC was held and resolved to approve the transaction But at the intrinsic value, per the report we submitted to IC and PMC, i.e. at 7 Rand 06. IC subsequently held a telecon on the matter and resolved that PMC had the DOA to deal with the transaction. Based on an email received from Dr. Dan on the 10th of April 2018.
Question? Yeah, question. Given that there was such disconnect about the prices, you know, the sponsor wants 39 rands a share, you want 7 rands a share, was there no point where you said, you know, this ain't gonna work? Should we put our money here? You know, given such a disparity of expectations.
Yeah, so I think one had to get to a point where we said, if we were being forced to put our money here, then we can only do it at 7 Rand. If we had a choice as a team whether we'd want to do it or not, the answer is we probably wouldn't want to do it. If we don't have a choice whether we want to do it or not, we were saying, and PMC approved and agreed with that price to say, we can do it. We can see a scenario where it would be, the reality is every investment has a price. You know, every company, even companies that we don't find attractive, they do have a price. So we were coming from that point of view to say, every company does have a price, and at 7 Rand 06, there is value that is emerging. But definitely not at 39 Rand.
And there was some pressure, you know, coming through from the top, isn't it? Generally.
It was, yeah, through debates and discussion, it was clear that there was pressure to say this is a transaction that the executive or the CEO would have wanted to enter into.
All right. So the pressure came from whom? You know, from the top. Who were the people who were putting the pressure?
You see, for example, there would have been discussions with Fidelis where he said, listen, I've received a phone call from Dr. Dan, and he's saying we need to do this. There were numerous discussions and debates wherein, for example, I recall a debate where we were told that we don't understand the business model of Sagarmatha, which I mean, those kind of comments are valid. There's nothing wrong with somebody saying that. However, you could see that, you know, we've been said, your valuation is or your view of the company is maybe there's things that you don't understand, and obviously then there would have been debates even with management. You know, there would have been debate even with Iqbal Survey, where I recall a meeting where he sort of made the point that, you know, if you look at the NASDAQ and the companies that list on the NASDAQ, it seems as if South African investors don't understand fourth industrial or you know, e-commerce businesses. So there were those debates, but it was clear that there are people who hold a different view on this opportunity than what I did and what I think Victor did and what Sunil had.
But sorry, what was your team's view? It seems to me that you weren't completely against the deal. You would go for it if PMC, for instance, could accept your valuation of 7 Rand plus per share. Am I correct that you weren't totally against it?
Yeah. So I think, once again, going back to our framework, there are elements of this investment opportunity that would make sense conceptually, in the sense that one does believe in e-commerce businesses, as an example. One does believe that as media becomes or digitizes, there is a growth opportunity wherein you could see news being distributed via e-commerce or digital platforms, and in the future it was our view that that would be a growth area. There was obviously independent media was loss-making. There were also the idea around, for example, one of the companies which were in the e-commerce space, which had a very small market share relative to its competitor, which is owned by Naspers. So even though we liked that business, we were saying it's the weaker one in the industry. So what I'm trying to say is we looked at all the different components and said, we can understand that if you put together this opportunity, at a certain price, it could make sense. So,
Sorry, I'm not quite with you there.
okay.
I understand what you're saying, but it begs the question. You are going to the PMC, and I just want to understand what the role is. Did you or did you not make a recommendation? Because the question that we've been asking is, you've seen the interconnectedness, you've got concerns about the multiplicity of the same company, the owing of the shares using PIC to buy out PIC shares, etc. Given all of that, not whether at 7 Rand it is a deal, because that is in itself, it's the whole that you have to take account when you make a recommendation. So in going to the PMC 2, notwithstanding that your point in 6.9, right, notwithstanding what you're saying in 69, in paragraph 69, did you make a recommendation about go ahead or say take all of these things into account? At this price for that in its own, it would be okay, but taking all these things into account, we say go with it or don't go with it.
Yeah, maybe if you just go, thank you. Let me try and answer it, because if you just look at our actual recommendation, maybe if I may be so, just to go there so that we are clear about what is the recommendation the team made to PMC, and that is found. So this, I'm just going to read obviously there was PMC 1. I'll read the PMC 2 submission, which is effectively the submission that was made on the 4th of April 2018.
And I'm assuming that you will give that to the legal
Correct.
team.
We will
because
make that
haven't got
available
that.
to
Yeah.
We will obtain it and provide it to the Commission.
And I think it's important to understand the context to which what the team is managing. The team is managing to say, if we are forced to do this transaction, this is what we are recommending how it could be done. Okay, so our recommendation, let me read our recommendation. It is recommended that Portfolio Management Committee listed approves an investment in Sagarmatha at or below our estimated intrinsic value, so at 7 Rand, subject to the following conditions precedent. The PIC and Sagarmatha entering into a cash-settled put option to protect PIC's client against a share price decline, and I think a lot of that came from our experience with IO. A commitment that Sagarmatha will spend the equity funds raised only on acquisitions for growth and within 24 to 36 months. Now, why we are putting that there is this is acquisitions for growth, not to buy out the PIC. So we make a recommendation, we are putting what we are saying, we are recommending, but with this so we are trying to manage that to say. So anyways, let me finish reading it. Let me repeat it. A commitment that Sagarmatha will spend the equity funds raised only on acquisitions for growth and within 24 to 36 months. A commitment that Sagarmatha not pay dividends for at least the 12 months after listing. That's also to manage the risk of an outflow, what you talked about of money coming out. Sagarmatha implementing a conflict of interest policy. The appointment of independent non-executive directors to the board of Sagarmatha. Shareholders' approval, very important. Shareholder approval for all acquisitions that are greater than 10% of Sagarmatha's market cap. So in as much as I'm saying we recommended approval, we were recommending as a team to say there are concerns that you've raised around related parties, around the independent MIA being put out. And therefore our recommendation was, first of all, even before these other conditions, to say we're not going to be paying 39 Rand per share. We are asking that if we do approve this, it must be at 7 Rand. And if you think about it logically, what that would have meant for the company is they wouldn't raise as much capital as they were asking for. So if they were asking for 4 billion, they would have maybe raised, I don't know what the number is, but much less than that. And that money that was raised would go into growth companies or growth acquisitions.
What I would like you to do is finish reading 69, because I think that that relates to this, to a question that I would have in relation to that, if you
Okay.
don't mind.
Okay. Based on an email received from Dr. Dan on the 10th of April, 2018, it became clear that Sekunjalo had continued negotiations on the transaction with Dr. Dan. In this mail, Dr. Dan proposed that we submit a new PMC document. The salient features of the deal that was reached was that PIC will subscribe at Sagarmatha's originally requested listing price of 39.90 Rand for 3 billion Rand worth of shares. In addition, Sagarmatha would issue PIC a call option of 1 Rand on enough number of shares so as to give us, meaning PIC, an average price of 8.50 Rand per share. In effect, the PIC would be receiving exposure to Sagarmatha at a lower price, 8.50 Rand, than the IPO price on the same day that the other subscribers will be paying the full price, being 39.90 Rand.
And that raises the question of ethical. Would that be exposed so that everybody else buying at 39.90, should the deal have gone through, know that the PIC was actually paying substantially less? And would that be an ethical approach to such a deal from the PIC side?
Commissioner, in my view, I don't, unless it was fully disclosed well ahead of time, you know, in the PLS and to the other prospective investors, if that wouldn't be correct in my view.
So even the proposal of doing this indicates unethical behavior. Yeah, it wouldn't be normal. It wouldn't be normal. Unless there was full disclosure of this, it would not be okay.
It would not be okay in my view. I think it would have had to be, and even if there was disclosure, why would I be buying shares at 39 Rand when the PIC is getting exposure to the same company at a lower price on the same day? It's different. If it's different dates, obviously valuations move, but on the same date, that for me it doesn't strike me as if it's something that is normal. I've never come across something like that.
And in addition, it is at 8.50 Rand, not 7.06 Rand.
And it would have been above our recommendation of 8.50 Rand. I'm sorry, 7.06 Rand.
Yeah, and one question is that, I mean, why would the JSE allow this? Because it's really a huge difference, or, you know, as a first thing. The second point is that, I mean, how can you structure such a call option, I mean, with such a huge difference in prices? Wouldn't that be costly, you know, if you can explain to us, you know, how would this option work, given such a huge disparity of the price, the mathematics of it?
Yeah, I think, so my deduction when I look at it, I was not part of these negotiations, I'm just deducing. It's obvious that Sagarmatha desperately wanted to get the 3 billion from the PIC. And therefore, they were willing to structure a deal in such a way that they would get the nominal 3 billion Rand. And the way they were trying to work around, and this is just based on my analysis, I haven't talked to them, or I wasn't in that meeting discussing these things, was they were saying, let's go ahead, and I think it's also quite a lot to do with, once the 39.90 Rand is in the PLS, you have two options. One, you pull the PLS, you delay the IPO, you reissue a new PLS at a different price. So that's one option. But if you want to keep to the original timelines where you don't want to pull the the PLS, which is already JSE approved, you want to go ahead with the deal, but PIC has raised concerns around valuation. I think the way they were trying to work around that was to say, we don't want to change our PLS, so come in at that asking price, but we will satisfy your concerns around valuation being too high by giving you more shares. That's effectively what I understand this to have been.
And the plan was for them to structure that option then? and pay option premium prices and all that to the PIC?
Well, no. It would have been a call option. In other words, it would have been the right for the PIC to get additional shares at R1 to the extent to which the average in price then comes down. Because remember, you're getting a certain number of shares at 39 Rand 60, and then they're giving you another instrument here, which is the right to get more shares at R1. Not if the price. So it wasn't related to whether the price would fall or not. So what they would say is, give us 3 billion Rand at 39 Rand 90. For that 3 billion Rand, you get, let me use an example. It's purely an example. You get 10 shares. We then are going to give you a contract which allows you to get more shares, let's say another 3 shares, by just exercising that contract at R1. So for R1, you get an extra 3 shares. So now you've paid 3 billion Rand, but now you've got the 10 shares from the 3 billion Rand, but also you've got another 3 shares from the R1. So now you've got 13 shares. So then the average comes down from the 39 to the 8 Rand because you've been issued more shares.
They have the money, but it doesn't diminish the risk of the company. Even if you get more shares or whatever, I mean, generally the risk is still there.
The risk is still there, but also the nature of the structure. I struggled to understand whether that is, something that would be allowed in normal capital markets activity. I had never seen such a transaction.
But to just, if I can try to just summarize it, the essence of it is that Sagarmatha would have got 3 billion Rand, and the exposure of the PIC in terms of shares would have been far larger.
Correct.
That's the essence of it. So that the risk to going forward is actually even greater because you don't have a 29%, you might have a 70% ownership.
Well, the risk, the 3 billion Rand remains the 3 billion Rand.
Sure, but your number of shares is increased.
Correct. That is correct.
And therefore the percentage of ownership in Sagarmatha increases.
That is correct.
And therefore the risk to the PIC increases because you've got a bigger exposure to Sagarmatha than you would have had.
Well, it doesn't increase in the nominal sense.
No.
In the sense that the money at risk wouldn't have gone up.
The money at risk would not have, but your role, because you might have become a majority shareholder, you might have come close to the 40%, 50% mark of shareholding. You are correct. You are correct. Your obligation is changed. It's not just your risk who's changed. Your obligation has changed because of the size of your ownership.
Yeah. Look, I think I agree with you in principle, but the reality is that, if it's an associate, there's a certain level. If it's a subsidiary, it's a certain. So I agree with you directionally. What the actual percentage would have been, I haven't worked. I don't know what we would have become.
It's not the actual percentage. It's just that you would have held much more shares,
correct,
and they've still got the 3 billion.
Correct. I had significant reservations about this structure for 2 main reasons. Firstly, PIC would be getting an in price that is lower than the publicly quoted listing price. And secondly, I was not convinced that Sagarmatha had the balance sheet to act under the put. I communicated this to the CEO, Dr. Dan, at a meeting in his office. A letter from Sekunjalu was received on the 10th of April 2018, pledging assets on their balance sheet as security against the potential fall in the Sagarmatha share price. The problem I had with this was that most of the assets pledged were based on management's valuations, and we would have needed time to review these for reasonableness. I once again expressed this concern to the CEO, Dr. Dan. On the 12th of April 2018, the JSE cancelled the IPO of Sagarmatha and rescinded its approval of the pre-listing statement. So if I pause here, this is the reason why. So while we were still obviously mulling all these things and now saying, Sekunjalu is coming back with They are pledging more assets as security. While we're still mulling and having those debates with Dr. Dan, then the JSE pulled the PLS. That's why the transaction eventually, that's why it stopped. So in my understanding, based on the records that I've seen, it was not an FSB-related issue.
I think that's very helpful, and this clears that matter, because in previous evidence it has been mentioned that I think that it was the FSB, is my recollection. I might be wrong, but this then becomes the actual facts, and that's helpful. Thank you.
The reasons stated were that the company, being Sagarmatha, failed to comply with the Companies Act, and the company failed to adhere to a condition that it must release its reviewed provisional results by the 9th of April 2018.
Mr. Commissioner, that's Mr. Mlebazi's evidence, unless if there are further questions. And I've noted that it's 11:26. Shall we proceed or? Okay.
And I'll follow up on the conundrum of listed versus unlisted. You mentioned that you actually had a second point, but I don't know whether you can sort of remember that. But broadly is, and I know this involves GEPF and all that. What is your thinking about that conundrum again? Just give me sort of a final view on that one.
I think the listed and unlisted asset classes both play a critical role in generating long-term returns for clients. If you look at our peer groups or the PIC's peer groups globally, they've got significant portfolios in the listed space, and in the listed space I'm talking listed equities, listed bonds, money market instruments. They also have significant portfolios in the unlisted space, being infrastructure funds, private equity funds, private equity funder funds, and that entire, even unlisted debt. And I'll give you a good example. On the rest of the continent, for example, in my opinion, a great way to invest on the rest of the continent is actually through unlisted debt, because listed equities has got challenges around liquidity, etc. And so, if you look at the opportunity set, in my view, there's a role to be played both of listed investments and unlisted investments, and therefore, it would make sense to me directionally that as the portfolio of our clients or of the GPF grows, you would want to diversify across those asset classes. And I think it's a case study that has been proven over and over again globally as a best practice to say diversification across asset classes, across the listed space, across the unlisted space, overall generates better risk-adjusted returns. I don't know if I'm answering.
In many pension funds, I mean, the unlisted part is about 20%, CalPERS and the others probably, but GEPF I think is about 5%. 5%. What's your views on that one?
My opinion is that there is a case to be made to increase allocation to unlisted assets, not for the sake of it, but purely because there are return opportunities inherent in unlisted assets. So it's not purely just to allocate to unlisted for the sake of it. It's to look at the returns that are being offered in that space. Private equity, for example, if you look at a lot of the returns being, there'll be IRRs or internal rates of returns, which is a measure used in the unlisted space, particularly in private equity. There are a lot of very attractive returns allocated there. So I think the way to think about it is, where is the most attractive risk-adjusted return? And if there is an opportunity set in unlisted, then in my view, it makes sense to allocate to there, not because it's unlisted, but because it's offering an attractive return for clients.
The final question is on you, and it's quite, so Mr. Nema Govani told us here that you are facing some sanctions on the IO transaction, that there were about 7 to 8 people who the PIC is looking at sanctioning. What is your view, on that issue? Am I clear?
I,
On the IO
that,
transaction.
I'm clear.
Sorry, Mr. Commissioner, I'm sorry to interrupt. And I think it's only fair to tell the witness that he might prejudice himself by answering that question if he is charged in a disciplinary hearing.
Happy if you don't want to
Okay.
answer it, I'm happy to leave it. Yeah.
I will leave it, Commissioner.
Final question, hopefully. I don't have a difficulty with debates taking place between, let's use the example of your team, with whoever you report to above you, when you deal with, your research and your report and whatever. But I'm concerned about you or your team or a team like yours being dictated to by somebody from above. And would like to know, have you got any views as to how that can be dealt with and stopped?
I think, in my view, Commissioner, there needs to be a segregation of duties. I think the role of the CEO, the CFO role, in my view, if you look at what happens in the private sector, CEOs and CFOs do not sit on investment committees and are not part of decision-making in terms of investing. So the people that are involved in the front office in terms of making investment decisions must be held accountable based on the returns that they generate or not generating. And they must be given the right to apply their mind, use best practice investment principles, and decline or approve or invest or sell or buy investments as they deem fit within a risk framework, within certain parameters, and then be held accountable for the returns or lack thereof of their decisions. I think then you need to have the CEO role, which in an asset management function really is more operationally involved, is more ensuring that stakeholder relations are what they need to be, etc., etc. The CFO role is effectively a finance function. It's a procurement. So it's ensuring, that the reporting in terms of financial reporting is so. Those two roles, in my experience in the private sector, have a specific, clear outcome, and then there is the CIO role, and that CIO role is concerned with the generation of risk-adjusted returns and holding investment professionals to account. And I think so that in my view we need that segregation of duties. And I think if that happened, then the need to, for example, take an opportunity to PMC. And by the way, just for context purposes, submission to PMC is literally 5 to 10% of what we do as a team. But it has generated such negative publicity or incorrect behavior, because I think of there has been a challenge around segregation of duties. And I think the segregation of duties will go a long way to allowing investment decisions to remain with the investment team, but on the same, and if that is so, then the investment team can be held accountable. But you can't not have segregation of duties, and when things go wrong, you want to hold the investment team accountable.
Just as a follow-up, so it means that you are saying maybe that we shouldn't have a super CIO, that there must be CIOs within various divisions? Is that what you are saying maybe?
Yeah, I think there are many business models around the world that I can cite, wherein you do have a group structure at the top, but they've decentralized a lot of decision-making and accountability away from the center into different buckets. I think the PIC, as the largest asset manager on the continent and one of the largest in the world, in my view, would benefit from a decentralized model that really puts accountability in the front lines and concentrates, therefore, accountability and reward. To say, for the risk that you're taking, this is the reward. If I think as an investment professional, I'm happy to live and die on the returns that my portfolio generates, if I'm allowed to have the final say on what is in that portfolio.
And then given that you sort of run quite an active part of the portfolio, and you need to attract really good skill, of people, the analysts, portfolio managers, and given the bonus structures that are going down and all that, are you finding you are battling to attract top talent?
Commissioner, I think that is probably one of the most important questions that have been asked at this commission, to me. It is, if I may say, use some emotive language, it is heartbreaking to see the private sector skill that I managed to attract. When I arrived at the PIC, there were good people already at the PIC. However, we were able to attract a lot of private sector skill into the PIC. Highly skilled investment professionals who have a lot of understanding. Myself, I came from the private sector. And we believed that we could make the PIC competitive and be able to compete with the private sector. And therefore, when the very professionals who have been recruited find themselves in a situation where they maybe are not as incentivized as they should be, and are subjected to things that I think their peer groups in the private sector are not subjected to, the risk is that you will have significant resignations. If I had to ask myself as a general manager, what is the biggest risk that I'm facing now? It is largely the loss of key skills in the team.
Yes, thank you, Mr. Mlibat. Thank you very much for your time, especially that we couldn't finish with you yesterday and you were still available this morning. We appreciate that very much. We appreciate you being here and to testify before us. And I trust that if there's one or two more people from the organization who are prepared to come forward, maybe from the fact that you came, they will do the same. So thank you so much.
Thank you, Commissioners.
I might just mention that it may well be that you can be called back at some stage to come and answer certain questions or clear certain matters. Okay.
Thank you, Commissioner.
Thank you so much. All right, we'll adjourn now. Advocate Libber, any suggestions? Can we come back at 12?
Mr. Commissioner, my planning for the day is out of the window. I'm
Oh.
trying to regroup. Can I ask for a 15-minute adjournment so that we can try and catch up with some time?
For your 20-minute adjournment.
Accepted. Thank you, Mr. Commissioner.
We'll adjourn until 12.
Thank you, Mr. Commissioner. Our next witness, Ms. Adams, is ready to take the prescribed oath.
Hello, Ms. Adams. Your full names, please.
Khanewe Adams.
2 A's.
Yes.
I suppose you don't have any objections to taking the oath?
No objections.
Do you then swear that the evidence you're about to give will be the truth, the whole truth, nothing but the truth? Raise your right hand and say, "So help me God."
So help me God.
Thank you. You may be seated.
Ms. Adams, as part of the evidence you're about to give, you've submitted a written statement to the Commission.
Yes.
Were you compelled to give that statement?
No.
And were you compelled by the evidence leader to put anything in that statement with which you didn't agree?
No.
Okay. Can we start off in your statement, paragraph 1, page 2?
I am an adult female and currently employed by the Public Investment Corporation as a portfolio manager for listed properties. I have been in the employ of the PIC since June 2016. The facts contained in the statement are, to the best of my knowledge and belief, both true and correct. Section A, Introduction. I have been requested to give evidence in relation to my role in the IO transaction, which will be known as the transaction. I am one of the 7 signatories of the PIC's payment memorandum titled Request for Payment of 4,290,654,165 rand in respect of purchase of shares in IO Technology Solutions. A copy of the memo is attached, marked as Annexure GA1. This has also been mentioned in paragraph 69, page 15 of Victor's statement presented to the Commission.
Now, before you proceed, can we just go to the Annexure GA1? That is the payment memo dated 19 December 2017, correct?
Yes.
And if we can just go to page 3 of the memo at the bottom. Mr. Commissioner, there's an inscription next to the Chief Financial Officer, Ms. Matsepo Mure's signature. We attempted to give an inscription underneath it. It's written by hand, but it should read as follows: funds available, just inquire if risk should be part of this memo, and ESG to recommend that all is in order. Would you like me to repeat that inscription, Mr. Commissioner, or can we move on?
Please repeat it.
It reads, funds available, just inquire if risk should be part of this memo, and ESG to recommend that all in order.
The 8 is and.
That is correct. It's the Roman. Now, if we go back to paragraph 5, or your heading at page 3.
My first encounter with the IO transaction, 19 December 2017. I was the acting general manager for listed equities from the 18th of December to the 22nd of December 2017. I checked with the general manager of listed equities, Mr. Lebogang Molebatsi, if there's anything that I should be aware of before he went on leave, and the transaction was not mentioned to me. I was first made aware of the transaction on the 19th of December 2017 when I was approached by the Assistant Portfolio Manager for Non-Consumer Industrials, Victor Siani, with the memo for the transaction which needed my signature, amongst other signatures, in my capacity as the acting GM at the time. I then sent Lebogang Malebati a text message asking if he was aware of the transaction. If I recall well, his response was that he was aware and that I should speak to Victor about it. I then inquired with Victor whether the transaction had been presented to PMC listed and whether it was approved. He responded that the transaction had not been presented as the scheduled PMC meeting for the previous week had been cancelled. He also mentioned that efforts had also been made to approve the transaction via a round robin, which was also not successful as not all members of the PMC could be reached. He mentioned that the former Chief Executive Officer of the PIC, Dr. Dan Matjila, Dr. Dan, had said that payment for the PIC's participation in the IPO should be effected and the process would be ratified at the next PMC meeting. He also mentioned that Dr. Dan was in fact on the premises of the PIC at that time, although he was apparently on leave. I asked if we could both see him, that is Dr. Dan, to enable me to get a clear instruction from him. I needed the assurance as the transaction had not been mentioned to me before. We were able to locate Dr. Dan in the offices, and to my recollection, he repeated what Victor Siani had said, that we should proceed with the payment and process would be ratified at the next PMC meeting. Around the same time, I then also learned through an email forwarded to me by our head of quants, Mr. Simpiwe Maphumulo, that Dr. Dan had also requested some of my colleagues to liquidate some positions in order to create liquidity for the transaction. A copy of the email is attached and marked as GA3.
Sorry, can I ask you some questions there? Thank you. What did you understand that to mean, the sentence that Dr. Dan Matjila said, we should proceed with the payment and the process would be ratified at the next PMC? How did you interpret that?
At the time, I interpreted to say that it would be regularized, or when everybody was around to hear the transaction, that's when it would be regularized and the transaction would be heard. That was my understanding at the time.
And had you had any experience of a similar process of subsequent ratification
Not at
before
all.
in any other deal?
Not at all.
And our deal of that size, nothing?
No.
And then if you looked at this question of that you've raised in paragraph 11, what, and it relates to what you've also got in paragraph 13, the question of liquidating some positions to create liquidity. Do you know whether any losses were incurred in such liquidation and how much of the 4.3 billion that was required was created through the liquidation of those shares? Or those investments?
Okay. So to my recollection, and I actually have emails from the head of dealing which states what was sold on that day, within what time, at what prices, but what we were able to liquidate, what was needed then was around 3.7, 3.8 billion.
So virtually the whole amount, 3.7, 3.8 billion of the 4.3, you did not have sufficient liquidity for that. You had to liquidate other assets to get it.
It had to be the
And were any losses made on those assets that were liquidated?
Through you, Commissioner, so I would have to just go and double check what the net effect, because what you would typically do when you're selling a stock is that you sell when it's reached its fair value.
Sure, but you were
yes.
then having to liquidate at a particular time, moment in time, and that might have not been the most opportune to liquidate at that moment, and therefore there could have been a negative or something else that was not necessarily the opportune time. So it wouldn't just be the funding that was received to realize your 3.8, but were those stocks and what was actually liquidated Was it an appropriate time to sell them, and could you have done better? So just a bit, if you could look at that and
Yes.
come back to us with that information, that
Will
would
do
be
so.
helpful.
Will do so.
Thank you, Mr. Commissioner. We'll do so.
Can I just ask, but are you saying that there could have been some stocks which had reached fair value and you could sell them without a problem?
Yeah, so typically that's what you would do first, which is what I did with the portfolio managers that were in the office on that day. I think there were 2 other individuals there. We checked what could be sold. So first you check what would be liquid for you to sell in order to settle on the 21st of December. And then the second thing would be, is it actually the right time for us to be liquidating those positions without unnecessarily creating losses for the client?
How does that relate to your attachment G3? Because that seems to indicate from Dr. Matjila that, if I read it, it's let's create some liquidity for IO by selling Anglo only,
Okay.
if PSG agrees to an extension. So,
Yes.
that, I mean, that seems to be quite specific. Now, I would agree your approach would be to look at your best option of what to sell, what to liquidate to get the best results, but that seems to be an instruction.
Okay. So this was the first instruction that was actually not sent to myself, but to my other colleagues that I referred to in the statement. So it was sent to Mr. Leon Smith, Lebogang Malebati in his absence, Victor, and Simpiwe Maphumulo, which is then, and I cover it in the next emails, that because I wanted to get the instruction myself, I then checked if we could have another meeting with Dr. Dan, because yes, there was an instruction which Mr. Maphumulo came to me with, which I asked him to forward to me, and with that, I then sought to have a meeting with the people who would be role players in the liquidation with Dr. Dan.
Thank you. Let's proceed. Paragraph 12.
I asked my colleagues if we could all have a brief meeting with Dr. Dan to ensure that we all understood the instruction. From my recollection, present at the meeting was myself, Mr. Leon Smith, who was the acting head of listed investments, Mr. Simpiwe Maphumulo, who was the head of quants, and Mr. Emil Annandale, who's the head of dealing. If I recall well, Victor Siani may have been there as well. We had the brief meeting just outside the office, and I then asked Dr. Dan to kindly write the instruction on email and also copy my direct line managers, Mr. Lebogang Malebati and Mr. Fidelis Madavo, who's the executive head of listed investments. Dr. Dan sent the instruction via email as requested, which said that we should create liquidity to settle the subscription of shares in IO. A copy of the email instruction is attached, marked as GA4. Having received an instruction in writing, I signed the payment memorandum on the 19th of December 2017 as the reviewer of the document. There was another related memorandum compiled to request an increase of trading limits on our trading system to allow myself and another portfolio manager to load the trade on the system. I also signed the said document as a reviewer. I phoned Dr. Dan in the afternoon of the same day, requesting him to give us an instruction or an indication that we can still go ahead with the settlement process, even though the transaction or approval had not yet been ratified by PMC, as I was still feeling a bit uneasy. He responded that I could write him an email, which he would then respond to. The call was then followed by an email from me to him, where I repeated the request. He responded through an email that we should proceed with the settlement process, and PMC will be asked to ratify at the next meeting, as most of the members were already on leave. A copy of this email is attached and can also be found in Annexure GA4. I do not recall a transaction whereby the payment memo was signed before PMC approval.
Sorry, can I take you to, just in relation to the payment?
Yes.
and the authorization to your annexure GA1. And without going through them, because it goes through the deal process as agreed in the discussions, but it says that recommendation is recommended that this is signed off by yourself, Victor, and Fidelis, and Ernest Nasani, and Brian Mavuko, and then Matsepa More, and finally by Dan Matjila. Okay? If I could, and this is asks to approve the payment of the roughly 3 billion in respect of the purchase of the IO shares. And this is dated the 19th of the 12th. So I'm just trying to understand the sequencing, because you signed off on selling the instruction to create liquidity was also the 19th. So at that point in time, what time did you sign off the 19th to get the liquidity, and when would that liquidity have come into the PIC? Okay.
So my first introduction to the transaction was around midday, maybe around 11:30 midday. And then when the first email to liquidate was forwarded to me around 12:25. By 20:01, we had managed to track down Dr. Den with my other colleagues to get him to sit down, take us through the instruction, and also write the email. So it was quite pressurized. The day was quite pressurized. And so I don't remember exactly at what time did I then sign the memo. But before the memo was signed, there was a sequence of events which were, telephone calls and meetings, just trying to make sure that everyone who would be involved would be covered, so to say, and they all understood what had to be done, and more importantly, they understood it from Dr. Den and not just from myself as the acting GM at the time. So the selling of the shares would typically happen, everything happened concurrently. So as we get the instruction, then we load whatever that needs to be loaded, and I think, if I recall well from the emails that I got from the head of dealing, trading must have started around 1:30 on the day.
And if we look at the signing off from the head of legal counsel, which was PP'd by somebody else, Sechedi, I think it is.
It's W. Sechedi. She will also be called to give evidence before the commission.
Okay, but in her signing off, she confirms that all conditions precedent have been met and accordingly recommend payment. But on the 19th, there were no conditions precedent. The conditions precedent came after the payment on the 20th. So how does head of legal sign off on conditions precedent that are not there and say they're there? Was that something that you were aware of, that there were no conditions precedent at the time of signing?
So at the time of signing, what I was aware of was that there is a transaction that I had literally just known about like an hour ago, that there was a clear instruction that this transaction had to happen and the payment had to be effected, and everything in terms of process that could then be corrected would be done at a later stage. And in signing the memo, what would typically happen is that the compiler or reviewer would then walk the memo, especially in a pressurized transaction such as this one. If it's not pressurized, then you would typically ask the PA or one of the analysts to just walk the memo. So I did not necessarily walk the memo to each and every individual that signed on that day. What I did, Victor signed, and then he signed after me, and then I believe he then walked the memo. But you are correct that in terms of conditions precedent, that there was nothing that I was aware of in terms of any conditions, because all I had was the document that says that there must be payment made, and Dr. Den was there, and that the transaction would be regularized at a later stage. So that is the information that I was operating with.
And can you just clarify who drew up this memo? Was this something from yourself?
No, it was drawn up by Victor. So by
Victor.
the time he came to me, this was
the
already
memo.
was already done.
Thank you. And
I
then,
think the only change that I asked him to do was to put my name as the signatory instead of Lebohang's email, because I was instead of
acting.
Lebohang, because I was acting. Yes.
and then if we look again at the signatories, you've got Brian Mavuko having signed also on the 19th of the 12th that he confirms that there are funds available to cover the subscription for shares and accordingly recommend payment. Again, the time matters. If you've signed this, when did the actual funds flow in to be able to ensure that there was funds to pay this? And therefore, it would be very useful if we could know when this was signed. Did you sign that there were funds before the funds flowed from the liquidation? And when I'm saying you, it was Mr. Mavuko who had to sign that. Do we know when this signing took place? As I said, when the funds flowed, let's assume 1 or 2 p.m. or whatever it was, when you had the funds, was this signed prior to the funds coming in? Or no, with knowledge that the funds would be coming in? Do you know at all?
I do not know, because I like I said, I wasn't
Sure.
I wasn't with the memo
No,
making
I
everyone sign. But
appreciate.
what I know is that during that time there were trades that were being executed in a very high pressured.
But again, in our investigations, if we could look at that, because that would apply equally to Ms. Mora, who says funds are available, and whether that was in fact before funds were in, or knowing only that you were selling or creating the liquidity that was required. And then, of course, it's approved by Dr. Matjila in total. So for me, the question here is, all of this is done prior to any approvals of the 20th of December. The funds are paid, there's no conditions precedent, and you actually may or may not have had the funds in the bank at that point in time to be able to pay it away, as I would read this, depending on when the creation of liquidity actually took place. And I think it would just be helpful for a time sequence to understand that, and I appreciate, Ms. Adams, that's not something that you would have been aware of. It's just trying to understand whether this was in fact done pre or post having the funds available and signed off in where people are saying the funds are available. Thank you.
Thank you, Mr. Commissioner. We'll make that evidence available. Okay, let's proceed. Paragraph 17, Ms. Adams.
The transaction was loaded on the system on the morning of the 20th of December 2017. The transaction was loaded in 2 parts as per the allocation spreadsheet that was sent by the broker via our investment administration finance to listed equities. There was, one was for around 500 million and the other was for around 3.7 billion worth of IO shares that was loaded in 2 parts.
And the 3.7 would have been the liquidity you had to raise.
That's correct, yes. On the same day, I then learned via email around midday that the Office of the Company Secretary was trying to arrange an urgent PMC meeting for that day to discuss the transaction. A copy of the email is attached, marked as Annexure GA5. The PMC meeting to approve the transaction was held on the day, and Victor presented the transaction to the PMC. Permanent members of the PMC that were present on that day, from my recollection, were Dr. Dan and the Chief Financial Officer of the PIC, Ms. Matshepo More. If I recall well, Dr. Dan was also meant to be on leave on the day, but he was present at the meeting and dressed casually. The majority of other members was made up of people who were in their acting capacities. The PMC deliberated on the risks to the transaction and how these could be mitigated. It was later resolved to approve the transaction with the proposed conditions precedent. A copy of the PMC resolution is attached, marked as Annexure GA6.
Question? Just to check one thing. The CEO was on leave and then he came back to work to sign documents. I just want, like, is that proper? Could that sort of prejudice things if he's officially on leave, but he's signing documents and all that?
Yes, through you, Commissioner, the CEO was apparently on leave, and And he did come back into the office, even though there was someone who was acting, I would assume, in his capacity as the CEO. So I think him being present just added to the gravity of the matter that this has to be done, because he is there, he is present, and he is, he's not saying no to giving us instruction. He's not saying no to, us having a meeting to say, can we actually go ahead and settle and liquidate and so on and so forth.
And perhaps just to follow up on a couple of things in relation to that, was given that the memo that we referred to earlier in G1 was signed on the 19th, and the funds were released on the 19th. Obviously, this is something that, having a discussion about approval, was that disclosed that the funds had already been paid away at that meeting? And secondly, that if there was an approval of conditions precedent, I'm not sure how you do conditions precedent. Precedent means prior, I would have understood it. So if you do conditions precedent when you've already paid the money, it's not exactly. So I'm assuming from the conditions precedent conclusion that the meeting was not aware that, or an assumption could be that the meeting was not aware, or was it aware that the funds had already been paid, although two people who had signed off, the CEO and the CFO, were in the meeting. Do you know whether that was disclosed to the meeting, that in fact we've already paid for this and therefore this is not an approval process, this is something else?
So yes, the meeting was not aware, but the meeting was made up in the majority of people who were part of the processes and the happenings of the previous day. So Dr. Dan, I assume, had signed the CFO, myself, Mr. Victor Siani, Mr. Leon Smith, who was the acting head of listed investments, Ms. Winnie Sitedi, who was the acting head, or rather legal counsel. So there was a feeling that the people who were there, or who were at least members of PMC, had just taken part in what happened on the 20th. And now to then have a meeting, this was then the perplexing part about what are we then doing at the meeting if what happened on the 19th and in fact on the 20th, which is when we loaded the transaction, had in fact happened. But it wasn't mentioned in the meeting, the fact that there was a payment memo that had been signed the previous day. And from my side, coming from a point where I literally jumped into a train that was moving at a very, very fast pace, there's a lot of information that I did not know and I was not party to. I probably took it that there were other discussions that had happened outside of me that made what was happening and the presentation of the transaction, as it were, okay. And also the fact that, yes, there was ratification that was spoken of, which I had not previously seen or ever having been party to a ratification process. So I think at some point I thought maybe at the end the CEO or someone would mention that, or in fact, yes, the transaction had to be heard for the benefit of other people who had never heard of the transaction, just like myself, but probably at the end, then all of that would be sorted out. So I think in my mind, that was what was happening in my mind as the meeting proceeded.
Question? Did you feel any pressure, on this transaction like the others? Or, as you say, you just jumped into this fast-moving train and there was no time to ask any questions?
Commissioner, there was definitely pressure in that it's the 19th of December. It's a big deal. It's a big transaction. It's 4.3 billion rand. There's a lot of stuff that has to be liquidated. in what some would say a thin market. You know, there's issue of increasing limits. So within that pressurized environment, still trying to do what one perceives to be, you know, the right thing. So there was definitely a lot of pressure in terms of the time that one had to make sure that the payment is honored and the trade doesn't basically fail in the market, as it were.
Do you recall who were the other members of the PMC, who, other than the people mentioned so far, Ms. Moda and Dan Matjila, those who would not necessarily have been part of the prior discussions of the 19th and earlier?
Okay. So if I refer to Annexure GA6, which is the minutes of the meeting of the 20th, outside of the people who were privy to the information on the 20th, it would have been Mr. Mohammed Nala, who was the acting executive head of research and project development, and Mr. Duduzi Ntsibande, who was the acting head of risk and compliance, and Ms. Mutsidisi Moloi, who was the acting general manager for externally managed funds.
So those would have been the three people who were not aware?
Yes. The permanent member, the members of PMC who were not, yes. And, no, she's not.
But I suppose you don't know whether they knew or didn't know about what had happened on the 19th.
I would not know. I did not know.
And just to clarify, is that if they were sitting in that meeting and these matters were not disclosed, they would have not had full information?
Yes, that's correct.
So if it wasn't discussed and tabled in that meeting, they would not have had full information?
That is correct.
Okay, thank you.
Okay. The last part of your statement.
Upon my return from leave in January 2018, I reported back briefly to Lebohang Molebatsi what had transpired on the 19th and 20th of December, and that he would obtain an appropriate update from Victor.
Thank you, Mr. Commissioner. That concludes the evidence of Ms. Adams.
Yeah, I'm just concerned about whether or not the three people, you know, Mr. Nzimande, Nala, and Ms. Moloi, whether or not they knew about this, because if they didn't, one asks the question, why were they not informed? You can't give an answer to that, hey?
No, sir. As I had said, I think even probably an hour before the meeting happened, there was not even supposed to be a meeting. You know, such were the events of the day that there was a lot of stuff that was not, a lot of things that were not making sense, including that fact as well. And there could have also been on the parts of the people who knew that if the CEO is there and the CFO is there, and other people know what had transpired and they're not saying anything, then are you best placed to be giving out that information?
No, I'm not blaming you for not mentioning it.
Yes.
I'm simply saying I'm concerned as to whether or not they knew.
Yes.
Because I'm trying to think in my mind what it amounts to if they didn't know and weren't informed.
Yes.
What that amounts to.
Okay.
And you are not able to give me an answer to that. Yes.
What through you, Commissioner, what it then amounts to is that whatever decisions or input that they would have had at the meeting would not have come from a point of full knowledge of all the facts at that point pertaining to the transaction.
Yes, that is correct.
Yes.
And what I'm asking myself in my mind is whether or not that is fraud.
Just to check something, if you can recall, sort of which shares were sold or how many shares were sold to finance the IO transaction? Can you recall the shares and
Okay.
the number of the?
We can provide the list, but from the top of my mind, what I remember, it was Anglo.
Mr. Commissioner, that would be part of the evidence we will still provide to the Commission. Yeah.
Ms. Adams, thank you. Thanks very much for your testimony and for your time. I may mention that you might be called back in due course, and I hope you will be amenable to that when that time comes. So thank you so far.
Thank you.
Thank you, Mr. Commissioner. It's not necessary for an adjournment. The other people are ready. Can we have just a brief moment to rearrange the chairs?
Do you want us here, or we can sit
You're
through
welcome.
it?
It'll take a minute. The next witness will be Candace Abrams. She's present, and her evidence will be presented by my colleague, Advocate Goe. You ready? But just make yourself at ease. You ready?
Your full names, please. Hello.
My full name is Candace Justine Bobby Abrams.
Justine with an E at the end.
Yes.
Yes. Otherwise, it'll be Justin. Do you have any objection to taking the prescribed oath?
No, Mr. Commissioner, I do not have an objection.
Right. Do you swear that the evidence you're about to give will be the truth, the whole truth, nothing but the truth? Raise your right hand and say, "So help me God."
So help me God.
Thank you. You may be seated.
Thank you, Commissioner. Commissioner, I'd like to just highlight that Mrs. Abraham's testimony basically will start with her zooming into the risk department, which is quite important. And throughout the evidence that we've heard so far, there were a bit of confusion on who does what. So basically what she's going to do is zoom into the mechanics of the risk department. She's going to deal with both IO and Sagarmatha, and as well as IO and Sagarmatha.
I just hope that we weren't confused.
I hope so. I hope so too, Commissioner. Ms. Abrahams, am I correct that you have provided this statement?
Yes, that is correct, Mr. Commissioner.
Were you coerced by the evidence leader to give the statement?
No, I was not.
And is this statement, everything, the information provided in the statement, your input and nothing was added by the evidence leader without your consent?
That is correct, Mr. Commissioner.
Just give us a moment. Yeah, but I don't have it.
Why don't you take this one of mine?
Yeah, you work on the old one. And have you got it? Okay. Okay. Yeah, all right. Thank you. Thank you. I just didn't have a copy of the statement, but I've got it now.
Beg your pardon, Commissioner?
No, I just didn't have a copy of the statement, so I was still looking for one. I've got it now.
Oh, my apologies for that, Commissioner.
You can proceed.
You can start with paragraph 1.2 of your statement.
Thank you, Mr. Commissioner. The averments made in the statement fall within my personal knowledge unless the contrary is explicitly stated herein or appears from the context of the statements, and they are, moreover, true and correct. Paragraph 2, my educational background. I hold a BCom undergraduate degree, majoring in finance and business information systems from the University of Natal, Durban in 2002, and a Master of Business Administration from the University of Pretoria in 2015. In terms of my employment history under paragraph 3, I have worked in the financial services sector since 2003, both in front office and middle office roles. I've occupied roles in the banking sector as a deal transactor and primary relationship banker. I've also occupied middle office roles in the development finance sector as a senior post-investment associate and senior risk manager in credit risk. I currently occupy the role of senior manager for enterprise-wide and operational risk at the PIC. I joined the PIC on the 30th of January 2017.
Sorry, just for my benefit, front office, middle office, what's that?
So, thank you, Mr. Commissioner. So, in terms of front office, that would be a sales-related role or an investment transactor type of role. A middle office role would typically encompass investment support functions.
Sorry, while you're doing it, why don't you just cover back office as well, so that you've covered all three?
Can I proceed? Thank you. I'll proceed from point 3.3. Oh,
Back office,
back office.
my apologies. So the back office would really be your finance functions, an area that I have not worked in. So from a front and middle office, you're really looking at deal origination in front office, putting transactions together to present to committees for approval. And then the middle office role is really, once transactions are approved, it's the implementation thereof from a disbursement as well as from a monitoring perspective. The back office roles that I would typically allude to here would really be the administrative tasks that would sit primarily within your finance function. Thank you, Mr. Commissioner. I joined the PIC on the 30th of January 2017 as the Senior Manager for Enterprise-Wide and Operational Risk in the Risk and Compliance Department. I report to the Executive Head of Risk and Compliance, or the EH, who at the time was Mr. Paul Magula. I have been occupying the role of Acting Executive Head for Risk and Compliance from the 6th of March 2018. My role as a Senior Manager for Enterprise-Wide Risk at the PIC. This role entailed oversight of the PIC Corporation's organizational risks on an enterprise-wide basis, as well as oversight of the operational risk and business continuity management at the business unit level. In this capacity, I'm required to monitor and report risks to the Information Technology and Risk Committee, or the ITRC, Executive Committee, or EXCO, the Audit and Risk Committee, or the ARC, as well as the board from time to time. In addition to the above, it became apparent from instructions from my executive head, Mr. Magula, to perform additional activities that he expected me to also be responsible for oversight of safety, health, and environment, other words, SHE, and physical security. This was as a result of the absence of resources in these functions following the departure of the SHE manager, which occurred before I joined the organization. My extensive operational involvement in SHE matters ensued until about the third quarter of 2017, when the PIC appointed a service provider, which entailed an on-site resource to assist with SHE management on a contract basis. This contract has since matured in December 2018. In my acting capacity of Executive Head of Risk and Compliance, I have, however, through the recruitment process, appointed a SHE officer who joined the team in October 2018 to fulfill these day-to-day duties. I'll move on to the department overview. The Risk and Compliance Department is a separate standalone department that reports to the Chief Executive Officer of the PIC. The department is primarily an oversight function, providing second line of defense assurance to the PIC management and the board. The department provides the second line oversight of PIC corporate activities as well as for the assets under management or the AUM activities. This department is led and managed by the Executive Head of Risk. On page 5, I've just highlighted the functions that fall within the department. These include credit risk, market risk, enterprise-wide and operational risk, regulatory compliance, static data management, performance attribution, mandate compliance, SHE, and physical security. Regarding risk governance, the department reports to the board, board committees, EXCO and EXCO committees in accordance with the delegation of authority. A brief synopsis from 5.6.1 to 5.6.7 indicates the different functions, governance reporting structures. The credit risk team reports to the portfolio management committees for both listed and unlisted committees. The fund investment panels or the FIPs, the investment committee or the IC, and credit risk related policies must be approved by the IC in terms of the delegation of authority. Operational risk reports to the ITRC, EXCO, the ARC, and the Information Communications Technology and Governance Committee, or the ICTGC. Enterprise risk and operational risk related policies are approved by the ARC and the board in accordance with the delegation of authority. The market risk team reports to the PMC listed committee, and related policies are approved by the IC. In addition, periodic reports by market risk to PIC clients are submitted through the PIC Client Relations Department. Performance and attribution reports to the PMC listed committee. They also produce periodic reports to PIC clients and are also submitted through the Client Relations Department. Mandate compliance also reports to the PMC listed, and periodic reports are also submitted to PIC clients through the Client Relations Department. Regulatory compliance reports to the Audit and Risk Committee, and the related policies are approved by this committee. The function, regulatory compliance, also reports periodically to the regulators, such as the Financial Sector Conduct Authority. Safety, Health and Environment reports are tabled to the ITRC as well as to the Social and Ethics Committee or the SEC. The SHE-related policies are approved by EXCO in accordance with the delegation of authority. Paragraph 6 outlines my involvement in investment transactions at the PIC since joining the organization. Within a very short time of joining the PIC, bear in mind I was a senior manager for enterprise-wide and operational risk, my executive head further instructed me to assist him in managing the credit risk team by providing desktop reviews of their risk reports, which are tabled to the various PIC committees which consider these investments. The practice was such that the risk analysts in the credit risk team are allocated due diligence work on an investment after the investment proposal is approved by PMC1. The said committee would approve for the investment team to undertake a due diligence together with the investment support teams. The investment support teams included those from risk, legal, and environmental, social, and governance, or ESG. Whilst the investment support teams comprise of these two other departments, my focus today is only on risk as one of the investment support functions. Regarding my involvement in credit risk, my executive head indicated that the team, being the credit team, is fairly new or not well experienced in presenting their reports themselves to these committees for investment consideration.
I'd like to go back to that statement you just made. It said, regarding my involvement in credit risk, my executive head, that would be Mr. Magula at the time, am I correct?
That is correct, Mr. Commissioner.
He indicated that the team is fairly new to or not well experienced in presenting their reports themselves to the committees. Now, does it mean that they had recently been employed, or what does that mean?
So, if you look at our department is a very young department, and some of the analysts in the team came through the graduate program, as I understand. I also understand that there was a period in which credit risk in itself did not function for a while. Some of the credit risk roles actually moved across to the Isibaya department at the time when Dr. Zulu Kaba was employed as the Chief Risk Officer. And when he departed, my understanding is that Mr. Magula then moved across as the acting executive head for risk. And there were only about 2 resources at the time, if I'm correct. In terms of analysts, there were no senior people in the team at the time. And I also understand through my engagements with the team that Mr. Magula would present their reports on their behalf, and they actually wouldn't attend those meetings. So at the time of my joining, I understand that it was only a short period of time in which they had started commencing attending those meetings themselves.
Sorry, can I follow up on that? And perhaps this is really for other information. What has come through in a number of witness testimonies is the relatively short period of time that people have been employed in a very complex organization, in essence. Whether we could get some information about the average tenure of the people who have been involved in these transactions, so that we know whether you've been there 10 years, 3 years, 5 years, whatever, so that we know we've got a sense of the duration or the experience. It's not that I'm questioning the experience or the expertise, I just think it's how new the teams are that have been involved in the transactions that are coming to the fore. Thank you.
I will arrange for that to be provided.
Yeah.
Thank you,
Question. You know, given that there are so many risks and of various types, do you think, say, within the PIC, you could have somebody who's head of risk who knows all the issues, you know, from market risks to corporate risks, IT risks, and other risks? I mean, do you think you could have a head of risks who would really be competent in all these areas?
Mr. Commissioner, if I would ask for the Commission to allow me to deal with that in Section 11 later on as I talk through that.
Yeah, thanks.
Thank you, sir. I was therefore requested, under 6.3, I was therefore requested to provide a desktop review of the reports that the analysts prepared prior to their submission, primarily with regards to layout and grammar of their risk reports to enhance the professionalism in the presentation of these reports. In assisting in this capacity indicated above, the executive head expected of me to sign off on these reports as a reviewer. It is on this basis that I commence signing off the risk reports for the credit risk team as a reviewer, whilst the executive head ultimately signed off for recommendation of the said reports. I must also point out to the Commission that through my previous experience, from time to time and where possible, I would also go the extra mile to provide some guidance to the credit risk analysts in the compilation of their risk reports. This would be in instances where I may have had knowledge of the typical investment risks that may be pertinent to a particular transaction at hand, which I thought should be fleshed out in the report. However, the extent to which I could provide this meaningful input was still limited due to not having been fully immersed in the due diligence process itself. I discussed the due diligence process and the role of risk in Section 8. In addition, at no point in fulfilling these duties on an ad hoc basis did I assume full accountability of the in the depth and breadth of the content of these reports, as this accountability remained with the executive head of risk and compliance. Also, as a result of my participation in the credit risk function at PIC, I was also instructed by my executive head to attend the Portfolio Management Committee meetings for unlisted investments as an invitee. However, he did not expect me to attend the committee meetings for the PMC listed investments. In respect of the latter, I assume that the instruction for me not to attend the PMC listed meetings would be due to the market-sensitive nature of discussions in these meetings and also to preserve Chinese walls. I only commenced attending PMC-listed meetings after I was appointed as the acting executive head for risk and compliance following Mr. Gula's departure in late February 2018. In assuming the acting position, I was appointed to act with full delegation of authority and powers of the executive head for risk and compliance. This official delegation of authority to act is dated the 6th of March 2018 and at the time was signed by the former CEO, Dr. Dan Matjila.
Commissioner, I've noticed that it's 1 o'clock. I'm in your hands. We can continue, and I would request a shorter adjournment for lunch, if possible.
I was, without having consulted my colleagues, I was just wondering whether we shouldn't finish 6 at least.
Okay.
I'm comfortable with that. Thank you.
Thank you, Mr. Commissioner. During the period in which Mr. Magula requested me to attend the PMC unlisted meetings as an invitee, I never had access to the board pack. The board pack would contain all documents related to the items to be discussed on the agenda for the meeting. These documents are generally uploaded by Company Secretariat prior to the meeting date for members to familiarize themselves with the content therein for deliberation and discussion, necessary for decision-making. Therefore, for the most part, I would be attending the meetings and hearing matters presented for consideration only at the time of the meeting taking place, and not having had prior time to read all of the content for consideration. Thus, any input from me, if I had anything to contribute, would be limited to me hearing the representations made by the various teams at the time of the meeting taking place. Therefore, this limited the extent to which I could provide meaningful input over and above what I would have given in the compilation of the risk reports. My executive head instructed me to refrain from speaking at these meetings, but rather to communicate through him and on email, as I was required to carry my laptop computer to these PMC unlisted meetings. Therefore, if during the deliberations by the committee on the various investment considerations, if I felt that an important question or comment on the merits of the deal or risk-related or otherwise should be tabled, I would do this through email communication to Mr. Magula. At the discretion of the executive head, he would then himself decide whether or not to put these comments or questions to the committee in relation to the matter being discussed. In 2017, I updated the credit risk template to improve upon the layout. However, the bulk of the content remained fairly the same. This was around May 2017. However, up until recently, being on or about December 2018, the risk reports did not make a clear distinction on whether or not their reports were prepared either on a desktop or on an on-site due diligence basis. Nor did they make a clear distinction on whether the risk rating applied to the risks reported on were on an inherent or residual risk basis. The rating of risks was something that came up in several committee meetings by the members of those committees, such that the members found themselves disagreeing with or questioning the basis of the risk ratings applied. To this end, I felt it was therefore necessary to review the template again that we had previously adopted. Around September or November 2018, I prepared an initial draft template based on the common questions raised by the committee members, as well as my own view of the additional disclosures that may be necessary to reduce the level of ambiguity in order to assist the committee in their decision-making. A fundamental amendment to the template was the inclusion of the two risk ratings, being the inherent risk rating and the residual risk rating. A standardization of the approach in arriving at these ratings has also been incorporated into the template to demonstrate consistency in the reporting from the credit team. The standardization of the approach that we've adopted in the new template is also aligned with the enterprise risk management framework of the PIC. This template was workshopped with the credit risk team for their inputs, as well as to incorporate any other aspects that they may deem pertinent based on their experience in conducting their due diligence exercises. We commenced adopting this template in December 2018 on transactions going forward, not retrospectively. The enhancements to the risk templates are included as annexures herein, namely Annexure A1, which speaks to the May 2017 template, and Annexure A2, which speaks to the October 2018 template.
Yes, thank you. I think it's time to take the adjournment. Mr. Liver, 2 o'clock, or is that too long?
That's fine. Thank you, Mr. Commissioner.
Yes, we'll adjourn until 2 o'clock.
Lekker girls, you're doing well.